Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Monday edition of Benzinga's Pre-Market Prep. Spencer Israel here with Joel Elconin and Dennis Dick. On this show today, we are going to hear all about Dennis's lovely vacation that I'm sure he had to Disney World, and whether or not he's recommending Disney at a buy or sell after running around the parks all week. We have two guests on the docket today. First up at 8:15, Fari Hamzei joins the show via Skype. He is with Hamzei Analytics. This is his site. And then at 8:35, we are joined by David Russell, Vice President at TradeStation. Joel, tell us how we're doing this morning in the S&Ps.
Big all range overnight. We're trading down 10 and a quarter at 26.80 and a quarter. Pre-market high, you went up in the 26.90 handle a couple times early last night around 6 p.m. And then also this morning, you went and made that new high at 91.75. So there's your bogey on the upside. On the downside, 63.75. Nothing down there, folks. Friday's low is way down at 47 even. So if the overnight trading is going to be the intraday trading, anything like the overnight trading, you're in for one choppy session. Looking here at the at Bitcoin here now, I'm actually seeing Bitcoin Cash up here at 11,500, but the futures aren't confirming that. But anyways, Bitcoin back at 11.5. Crude 61.19, down 6 cents. Gold basically flat, up a dime after Friday's rally, and silver hanging up a nickel at 16.52. Well, Dennis, we missed you, buddy. How was Disney World?
Oh, man. So that's my first vacation in 3 weeks, and I'll tell you,
3 years.
I need a vacation from the vacation because that was insanity. I think I'm coming in and recommending, well, we don't do recommendations, but holy cow, is the parks busy. I'll tell you, if that's any indication of what Disney's going to do in the next quarter, it was insanity. I haven't been to Disney in 10 or 12 years. Brought my 3-year-old and my 9-month-old there. Maybe the kids are a little bit too young for that, chasing the 3-year-old around the park. But I'll tell you, the crowds were just insane. On Saturday, we went, and even during the week, they were busy. But Saturday, this Saturday just went by, went to the Magic Kingdom in the evening, thought, maybe we'll go in the evening. Maybe the crowds will be a little bit less. Could not move in there, packed in there like sardines. Talked to another lady, and she says, I've been coming here for 20 years. I've never seen the park this busy. It was just crazy. It was an hour wait for any ride, and if you're going on the main rides, like Space Mountain, 3.5-hour wait. Now, I didn't have to worry about that because I had the toddler, so I was only going on like Dumbo rides and the Mad Teacups and stuff. But if you want to go on the main rides, like the Dwarves Mine Ride, which is a roller coaster there, or Splash Mountain or any of the main ones, you're waiting 2-3 hours for those. It was crazy. Or you have to get a fast pass, and that's obviously one way that Disney tries to get around the crowds. But crazy crowds there at Disney.
Did you lose Spencer at all? Did you
No, you almost need him on a leash though, but he listens pretty well, but he starts to sneak away every once in a while, so you got to keep a good eye on him. But no, did not lose the kids, so that was a victory in itself there, Joel. And speaking of victory, I heard Michigan had a pretty big victory there too.
We're gonna have to talk some
this morning with Miami.
Yes, Big Ten champs, back-to-back years, and man, not only did they win, they crushed everybody. They crushed Michigan State. They crushed Purdue. Big Ten champs out there at Madison Square Garden got a couple weeks off before the NCAA tournament, so excited about that. But 5 minutes into the show, we got talk markets. And boy, Dennis, you were so close to winning a steak dinner. I was just.
What'd you do? You got up there and just started selling spoos, didn't you? Yeah. You were selling just to keep that thing down.
They call me. And
what's the bet? What's the betting? I've already forgotten. You get away for a week, you forget everything. So I know we made a longer term bet, and it was when the S&Ps were right around where they are now. Yes. And what do we do? 100 handles up or 100 handles down?
Yes.
So what's the number? What's the number?
Well, we
did it on SPY, didn't we?
Yeah, no, we never do it on SPY.
I don't have S&P quotes. You're cheating me again. Okay, anyways, give me the S&Ps. What was the bet?
You had 2,800 and I have 2,600.
Oh, and it got up to what?
2789.75.
You were blocking it up there. So I got $10 away from winning another steak dinner for you. And now it's all the way back down to where it was. So
do you want out? Do you want out for a lunch? I'll let you out for a lunch.
I'm still sticking on the bull train. Although these charts are a little bit concerning, which we're going to jump into here in a minute.
Okay.
But I'm sticking on the bull train here, at least for now.
It was one of those bets, like when I made it, I'm like, oh, I'm going to take some heat on this one. And then it went up like 90 handles on me and it came back. Now I'm looking straight up. It's kind of a bad risk reward here if I'm looking for a scratch. But anyways, S&Ps, we'll see what happens. We're going to be chopping around this area for a while. You want to get back into the mode here and just following a couple of the big stocks. I'll just blow through them real quickly.
Yeah. So just to, and this is something I haven't taken a vacation in 3 years. So off from the market for a week, you get disconnected with it. You're trying to feel it and you're trying to look, I'm looking at my cell phone and trying to keep updated with the overall market. But really, and what I have is it's like the trader feel. And once you're in the zone, then you can get that feel going. And then obviously, that can, that's one of the main, trading tools that I have is my feel, 18 years of trading. Once you get some screen time, you get a feel for how they're working, how they're moving. But it's hard to get that when you're away from it, especially when you're at Disney World. So what I like to do when I come back from a vacation, which I haven't done in 3 years, is plow through at least the top 10 components of the S&P. Plow through the charts, get a feel for the charting action, what they did last week when you were away. So let's do that. Let's jump through, the top 10 components really fast here in the next 7 minutes before we bring Fari Hamzei on there at 8:15.
Well, the top 10 has turned into the top 11. Because Google did that funky split. So
we just say Google, though.
So but that makes it 22. That makes it almost 23% of the index. Real quickly, we will look at a chart of Apple. Apple made a new all-time high last week, Dennis. That was the early leader. We got into 180 handle, double topped at 180.50 area, and then got hit with the market. And you got a double bottom down at 172.50 area. So Apple extremely strong during the week, then kind of rolled over with the market.
Wow.
Yeah. And 180, once again, 180.10 was a former all-time high. So huge levels there to keep an eye on in Apple. Google, let's see how Google did last week. Kind of same story. Strong Monday and Tuesday, and then sold off later in the week. If you want to do some numbers on that, you did a nice retracement of the last move here. So figure out what that 50% retracement was. Overall, tech's staying right here in tech land because that's what make up the S&Ps. Microsoft got up, made a new all-time high, couldn't quite get to $96, and that sold off as well near the end of the week. Had a recovery on Friday.
That looks double toppy to me, though. That's the only concern there. If you go to the dailies, not just talking the recent one, when we went back the end of January, we struggled at 95, 96, and we sold off, obviously, in early February when everything sold off. And then where do we get to? Right back to 95, 96 and fail again. So that is concerning. Although I like the candle from Friday, but that 95, 96 major resistance.
Yeah, I stand corrected. The all-time high was 96.07 from February 1st. And you only got to 95.84 and 95.79. So there's your big levels there. In Microsoft, Amazon did a purchase last week. That made a new all-time high. Just had 3 days of tight ranges and then broke down a little bit. I can't remember. Who did they acquire?
It's a home security company.
A home security company.
What was it called?
I can't remember.
It's called Ring. Thank you, Schwab's Ring. Yep. I knew it was one of those doorbell type things.
Facebook, same story. A little rally early in the week, came back down hard and bounced on Friday. Really no big
It's news. Basically the top tech components are all tech stocks.
They are. Right? They are.
That's great. Well, it just shows how strong tech has been. And the top 10 components changed by market cap, obviously, with what's strong and what's weak. But wow. It's amazing when you just gave the top 5 or 6 components and they were all tech stocks.
Yeah. And I used to give you GE, ExxonMobil, Chevron, Procter Gamble. Remember that? Those
have all fallen out.
Yep. Those have all fallen out. Brick B real quick. Warren, he talked a little bit last week. Yeah, it filled the gap. I mean, rallied later, sold off later in the week, filled the gap in price action. JP Morgan made a new all-time high. That pulled off as well. Exxon Mobil, that same thing earlier in the week. Got over 80 down. You would have got to 79.87.
I've been selling that
you would have sold that.
75.
You would have.
Scalping out of that.
Yeah, because now you're underwater again. The low.
I am even. Isn't 75? I think I bought it right around there. So
Okay.
very close to even.
Keep an eye on 73.90 in this one.
Huge level.
Yeah,
Huge
the
level.
low from yesterday or Friday was 74.48.
The chart doesn't look great though.
Oh, Bank America, major resistance at this 32.50 level.
Wow.
Did make a high, but challenged that area that it had in February. Failed again here at the end of the month at 32.85 and sold off. Wells Fargo, once again, that stock just kind of getting
It's all banks and tech. That's the top 10 components. All banks and tech.
Yep. And then two CVX slipped in there.
CVX is still there.
Yep. The number 11 spot. That one, I mean, these charts, this Exxon Mobil and CVX, don't tell them there's an oil rally because these stocks are hanging out near the low of the move.
Yeah, but you know what? They're kind of their own thing because when oil was selling off significantly too, even towards last year, Exxon and Chevron were holding on. So there is obviously correlation and a strong correlation between USO and Exxon and Chevron. But I feel like they also are dependent on a lot of other things too. I mean, they're higher yield stocks. ExxonMobil 4%, Chevron 4.04%. So they can sometimes trade a little bit with interest rate concerns as well. There's other factors involved, and then there are S&P components as well, major S&P components, which we just said. So there's those arbitrage factors as well too. So they're not like they're pure oil plays from a fundamental standpoint, but there's other factors that are non-oil that can impact the price of those stocks.
And I guess the other thing, which is at the end of the week, Trump talking tariffs. And boy,
wow.
that
trade
wars are good, Dennis. Trade wars are good, right?
Trade wars are good. The market didn't think so last week.
And they're easy to win. That was his quote. They're easy to win too.
Well, we'll find out. I'll tell you though. Obviously, NUE were benefiting from those talks there from the Trump tweets there last week because NUE was strong, X was strong. What do you think of a chart like X? Let's talk U.S. Steel because this has been an incredible run here since November. It was $25. Everybody was throwing it out the window and getting rid of it there. It's all the way back up, and you're making multi-year highs here now on U.S. Steel. We got to go back out to, holy cow, we got to go back to 2011 to find levels here where the stock was trading last time up to $47. We know U.S. Steel is the most volatile one. What are your thoughts here that we've had such a big run? Does the run continue? I mean, you could argue a little flag here. You could argue this thing might have more gas in it yet.
I wouldn't be buying it. Would not be buying it up here at all. Not even with your money. It
hasn't worked to buy to 55, 46 because it's sold off there a couple times in the last few years when it's got in the mid 40s. The only thing is it's holding on. So that gives you the argument. If it could get back up above the high that it made just on Thursday, 47.64, then you think, okay, we're going to test $50.
Right. And then if I was long and I was just trying to hold on for dear life, not trying to pick a top, I would keep an eye on this 42.50 to 60 area. And several lows at 42.85, 42.80, 42.56. So that after that, there's a steep, big drop off down to the $38 area, but just really hard to chase. AK Steel, man, it's trying to get back over $6, but it can't. It's been finding resistance in the upper $6 handle. So, just hold on. If you have these long in your portfolio, they're moving your way. If you're not trying to pick a top, then maybe try and sell on weakness. But, big debate going on with these stocks. And I don't know, tariffs and going back to revive the steel industry. It makes me think I'm like going backwards in time.
Back to the 50s.
Yeah, exactly. All right, Spencer, 8:15.
Let's grab Fari.
Yeah. All right, I'm going to grab Fari on Skype right now. And
live on the fly.
I hope this goes
well. Video going on Fari?
We're going to try.
Kneecap.
Let's see how this goes. Fari, are you with us, Fari?
Good morning.
How's it going?
We're good. How are you?
Doing well. You're a little quiet. Maybe move a little closer to the computer. But what are you watching this morning?
I'm watching ESNNQ. Am I too far from the computer? What does it show? No?
You're good now.
Good.
Look at handsome,
How's it going, Fari?
We don't normally do this, okay? So I know it's my first time, so that's fine. I use it for go-to meetings just for my staff when we're going over, let's say, projects or issues, because my staff is not here. They're all over the U.S., both for support purposes and also I believe people work better in the environment they want to be in, so we use this for that, but let's give it a try. Let's see what
we like getting a feel for Cape Naples there, Fari. It's nice to see you down there.
Okay, you got a lot of computers going on. I have to shut down AVAX. Yes, that's flat. You guys don't have enough. You're like Jared. You don't have enough clearance to see that. So that's shut down. No, actually, he's got an issue. We're trying to find how to resolve it. So I bought a couple of more computers while we figure that's going on. But there's a 50-inch here that'll run the new desktop. That's it's a 50-inch, I think. Yeah. And this one is a 40. This is a 55-inch curved Samsung. That's a Sony. A couple of monitors here, and then you got the 8 in the back. So, and then the TV for news over there, but it's on mute. So this is basically how it works. A lot of books because I like some of my stuff that I use in the DSP, digital signal processing, available. Because I have to sometimes look up some formulas for that.
Where's Captain Tico?
Captain Tico has his own TV. He's got 85-inch behind this wall, 4K, Sony with a let's see, he's got a Blu-ray 4K, and he also just got a TiVo 4K, the Bolt, with a 3 terabyte of because he likes to watch what's the damn
Animal Planet?
Yeah, he likes National Geographic. He loves Seinfeld. We have, I don't know how
everybody loves Seinfeld, even Captain Tico.
Episodes of Seinfeld we have for him there. He doesn't like that Caesar. He doesn't like Caesar. The dog trainer. He doesn't like Caesar. So, what's going on, guys? What are we doing this week?
We're trying to figure this market out. I mean, obviously we had a nice rally the week before, and then I took my first vacation in 3 years. I went to Florida, down not by you, but by Disney World. There, hot week, and now I'm trying to get a feel for this market again because we sold off hard last week.
When was that? Last week?
Yeah, that was my first vacation in 3 years, so I'm kind of out of the loop.
The week before that, we were right near there. We were at Daytona for Daytona 500.
That's always a huge event up there. So,
yeah,
so give us your thoughts here now on the S&Ps because we got trumped last week a little bit at the end of the week there. Rallied a little bit on Friday, but it was overall an ugly week for the S&Ps. Absolutely.
Here's what happened. Can I share the screen here?
Yeah.
Okay, hold on. Let me share my screen. So this is also a first, but let's try it.
Let's try it. Let's do it.
There we go. Here's a timer chart coming online. You guys see it?
Yes.
Nice.
You do?
Yep.
Yeah, we got it. Yep.
Okay. All right. So what happened? Here's a term structure, if you will, of the S&P. Notice we're using cash here, and we bounced on the 9th. We bounced right up to 200 bar, and of course, usually when this happens, we have a sharp drop to 50 bar. These two act as like a sandwich. It's crucial to see what what we call retest failure works out. That is. No, look, it's a Stockholm syndrome. We're all hostages to the order flow. Nobody knows what the order flow is. But all we could do is interpret in near real time what happens afterward. This is a daily chart. So we came back up, bounced up pretty hard into the 50 bar, had a lot of trouble, broke out once, and immediately we failed. We had 2 closes above, then we had outside bar. That's an outside bar. You got a dot down there, and we dropped. If you go to the weekly chart, this is a SP1 Mobile. We actually had it last week was an outside bar on the weekly chart. You don't get to see these often. Usually near the recent highs, this should point to forward move downward. Whether we do it this time, the market is chaotic. Whether it works this one or not, but odds are you should be looking at it that way. So back to here. Volumes were not huge. You will not get a big spike as I would expect. But this bounce I could understand. We had lower, remember, this is a down to up volume ratio. That was a little bit lower. So the bounce came up. It was also 200. This was a huge drop. We're just only at -1 sigma right now. This is a -1 sigma line. All right. It would be crucial to see, can we reacquire the center, the 50 bar, which is a Cayenne. It's at 27.36. You wouldn't want to mark that number somewhere. Do we get there or not? The chaos we have in Washington, and some of the people I talk to may not be the same guys you talk to, but generally same profile. Some of these hedge guys in New York, they're scared to death. They're long and short, but the chaos is so much, they've never been programmed that way. We've never had an analog for this White House. So typically, the nervousness is too high. Look at the vols. Look what we've done with the vols. If you look at these vols, here's a vol. Let's go to weekly on a wall, because the cycles on walls are very useful. This is you see what I call the shock waves. This is what we had this time. We went to about 50, okay, on a weekly basis. I mean, well, it's a reading of 50, but in that week. We've come down. This shock wave is basically done. The test is 1336 area. If you cannot penetrate that, then we probably have some residual shock wave like here coming up. I look at the timeline. It's about probably takes a month or so plus to get there, maybe 2 months. So no market moves always the same, but you can see some, at least on where you fail on the price cycle, you can really gain it on a volatility cycle. You see that. They're equally distanced almost. So we probably have some action coming up. Some of the people I talk to, they're saying, this is cause of a problem. This is the treasuries. The 91 day, 5, 10, and 30. This is the 7-year highs. Okay, look what we have done here. We've broken 7-year highs constantly. And here's the 91 day. So the front end of the curve is coming up. The back end is still holding. This is a lot for cars and leasings. This is a lot for mortgages as a benchmark. But they also add a premium for the chaos. There's a chaos premium in the market, and then there's interest rates. So, but my purpose is here to highlight that and say, don't get fooled just by the interest rate. There's more behind the scene.
And we're going to get more information on Friday, Fari, with the jobs report coming here. That's going to obviously, that's going to be a big report here. So, thoughts here as we come into Friday.
I would watch what happens late Thursday and then early Friday morning, not because of this week, but just a pattern in the past. Usually, what you get is, especially the futures, as we get close to the number, most big players will, square their positions. My worry usually is if it gets too juiced up. That is, they push it one way too far, either too far high, too far low. Not because they know the number. The number is fairly decentralized, the non-farm. Only Powell and Grumpino would know that the day before. It's not even reported in aggregate until the very, very last moment. But as it gets juiced up, it's an odds game. You're gonna get to an environment where what are the odds of you pushing it further? So if it's too high up, you prepare to be on the short side. If it's too low, you prefer to get long side. But don't get in until the number is out. The people who bet on these numbers typically are not winners. Typically, they're giving in money to people like me. So if you want to donate, I'll take it. Kiko needs a new wardrobe.
What about any comments on crude oil here? Made a multi-year high in late January, early February. Catered down into the $59 handle. Rallied back, leaking again. I know you made some good calls on oil over the years. What do you have?
Well, Kiko did, but no worries. I'm looking at the OTF chart. I can't put it up here because of non-disclosure issues, but I'm looking at it right now on this other machine called Spirit of Cape Naples. It's after one of the B-2s that flies out of Whitman Air Force Base. Right now, I'm just looking at it sideways on this screen. We're about the center line of OTF chart, which it's a QCOM of all activities of the small guys and big guys, but filtered toward the skew toward the big guys. Because those are the ones who really that move the market. These are the whales. It looks to me we're at 61.78. And remember, I'm talking about J contract, which is April. So the J contract, right now we're trading 61.45. Center line is 61.78, somewhere in that range. Let me see. 78, correct. The areas I would watch currently, again, this is the most recent order flow. I would watch for 59.53 on the downside and 64.03 on the upside. Now, grant you, this is dynamic. I realize that. It changes each time a big number comes, a big trade comes in. But as it stands right now, as I shared with you, and the current CI is pointing to upward. We have a slight lift up right now. Okay. Now, the markets are still quiet. It's 8:26. As it gets more active, we get more value. It does change throughout the day, but those are two numbers I would watch out. Anne Marie does a lot of our OTF stuff in the morning. As a matter of fact, right after this, she'll be doing our morning video, and that's the stuff we look at. Look at where we are. What's the most recent data we have? What's the bias there as predicted by CI? And then where these bands are. These are what we call the B bands and K bands within OTF structure. And they're absolutely incredible. Of where it's, I don't know how it works. I wish I knew. Because it's a combination of a lot of hedge funds, basically, big money managers making this bets. But the price goes there, boom, bounce, and come back up. So right now, those are the two numbers I would watch for. 59.53 on the downside, 64.03 on the upside. And then this on the upside would be acquiring 61.78. And for the downside, it cannot penetrate 61.78. That's a failure. So if that does, then we have a downside move. Currently, latest CI shows it move up.
Let's jump into some individual stocks. Once the techs have been strong, but I want to go right to Netflix here because Netflix made a new all-time high on Friday, finally breaking out over 300. The party continues this morning. I think UBS raising their price target up to 345. NFLX is at 304 now. It seems like it's off to the races, breaking out over 300. Thoughts on NFLX? Why they trade the stock?
Sure. I just put it up on our screen. The same way we do our webinars. And we do them like options or stocks, what have you. And we look at monthly, weekly, daily, and 30 or 60 minutes. That's depending if you're live in a trade or not. But for our purposes, I would say let's go to a weekly, take a picture right here. Okay. Look at the Sigma channels. Look at the CI. Look how long CI has been positive. Okay. Not the CI diff, but even the CI diff was negative, was a small amount except one small time. Okay. These are weekly chart, straight up. +1, +2 on the weekly. Very strong momentum. Now, it's not going away. Look how Magic 3 and 4 Sigma are working. You get close to 4 Sigma, it's pulling back. It's gone too far. But look at the support. The center line is providing that support. And now we're sloping up. This is all about slope and color. The color that you have and the slope you have. All up, up, up. What are they doing? It's magic, obviously. But the momentum is there. Would I argue with it? Hell no. You don't want to get in front of a freight train. At least not down here. Why? It's not 4 Sigma yet, or 3 Sigma plus. Here's was 3.5 Sigma, almost 4. Let it get there. What would that put us? Somewhere up here. Guys, this could explode up.
All right. Fari.
Now, what's the catalyst? I don't know. I'm not in the news business. We'll leave that to the news junkies. I'm more of a price and volume activity.
All right, we've been on the line with Fari Hamzei from Hamzei Analytics. Fari, thanks so much for your time today. Love the video. We'll talk to you again soon.
Thank you, Spence.
All right.
Talk to you guys soon.
Have a good one. All right, what's happening right now in the markets, guys? Anything?
That's nice to see Fari. That was fun.
That was very nice.
That was fun to see Fari there and his setup and at Kate Naples there. Let's just David B's bringing up VRX here, Dennis, and boy, that got hit after its report, and it just kept on getting hit here. Deutsche Bank coming out with a an upgrade to buy
here. Price target $20.
Wow, just
you know what though, overhead, and I'm in this, and I'm getting hit on this. I put this in my investment portfolio. Obviously, it was a mistake. I thought maybe Tava. I thought looking like, they're trying to turn it around, and the report's disappointing, and it's obviously went down since then. So it was a mistake for me to be buying it. I like the chart back in February. It looked like it was starting to form some support, a little cup and handle, and boom, the earnings, we always say, when you obviously have fundamental information coming out, that technicals take a back seat, and that's what's happened here. Stock broke down. I mean, biotech's had a rough week when I was away. There was a lot of different, biotech stocks that really got hit hard. Not that, or drug stocks, I should say, not just biotechs. But it's been a rough week it's been a rough year really for drug stocks. I mean, Merck, Pfizer's held on a little bit. My Celgene's been absolutely annihilated there. I own Biogen, that's been killed too. It's the drugs are out of favor, and you do have concerns that Trump is going to do some stuff with drug pricing too. What stays out of favor? What is out of favor stays out of favor for a long time. And I've been punished here by having a lot of drugs in my portfolio, and they have not been working. So not coming in here and buying more on this upgrade this morning, I think you're going to have people like, not, and I'm a longer term investor, but you have people who are buying this thing up at 17, 18, 19 bucks in the last month, like me. And a lot of those people, if this thing comes back up, are going to be looking to cut their losses. So I think you got overhead supply here in VRX, which is not good for my VRX investment position.
Yeah, just keep an eye with trading up at the pre-market, 1566. That takes care of yesterday by a wide margin. But if you want to keep an eye on just your 2-day high, even at 1636, and that was buffeted by your close on Wednesday. So there's if the rally continues here, do not want to see it open up, go up a nickel, and then keep going straight down. Allergan, just quick thoughts on that got hit.
It's another one that's in my investment portfolio that I've been wrong on, and for a long time. And this is one I've been punished on. I'm in this from 220, and it's down at 144. So these are, if I look at my investment portfolio, I'm up in a lot of stuff, but I'll tell you the stocks I'm down in. Obviously, I had GE for a long time in that one. I've cut half of it back, but that's just ugly. But Allergan is one of the ugliest ones because I just bought this last year, and I couldn't have invested at a worse time because I bought it around the 220. It's pretty much been straight down ever since. So bought it back in the summer. It's 144 here now. I mean, fundamentally, it's cheap, but it just keeps getting cheaper. And there's concerns, a lot of debt here. So it's a concerning chart. It's going straight down every day. So I don't want to add to it. Definitely don't want to add to it. And if I was trading this, I would not want to be long it. I have it in my investment portfolio. It makes me throw up every time I look at the chart. So I definitely don't want to be buying it.
Celgene has a level to lean on. It did get.
Oh, he's jumping over to Celgene.
Yeah.
You're just picking on me today. These are three of my worst stocks. Well, actually, Celgene, I'm okay. I bought it back at $20 years ago, but I put a little more in my investment portfolio at 100. Shouldn't have did that.
All right. Well, for Allergan, you made that low on Friday. You want to distance yourself from that 143.10 low. The only reason I brought up Celgene is because you have a triple bottom here, 87.11, 87 even, 86.55. So if you're trying a swing trade or whatever, you have at least more support to lean on than you do in the Allergan. And Tava, Dennis, you're not in Tava, but we got a question about it.
I mean, Warren bought it. It got the Warren bump. It's hard to chase on these things. They seem to give you another chance, especially when they're drug stocks. And the people who are buying the Warren bump back in the middle of February when it got up to $21 are getting punished for it now. Now it's back down here at 19. It absolutely has to hold the 18. That is the level of all levels for this stock. If it takes out the low, and if you want to get precise, the actual low is 17.75. It takes that out. There's a lot of air below, but people will buy it and people will continue to defend that level because Warren is in it. So that helps. So I would, I can't argue with you if you're buying it here at 19, but I wouldn't want to own it below 17.75.
Just a little bit of news. I don't know if this came out while you were on vacay or the week before, but Warren said this wasn't his pick last week when he was on TV. He said,
did he say that?
Yeah, he did. He said it was
a Munger. Is that what he's saying?
He didn't throw anybody under the bus, did he, Spencer?
No, he just said it.
Really?
Yeah.
That's so weird that he would say something like that.
I know.
Like it's his fun buys, and this wasn't my pick. What the hell does that mean? I gotta go watch that video. That's crazy.
Yeah, that was.
Benner just making a good point here, and I've thought this too as well. He's saying all of these drug stocks that got a lot of debt. They got hit hard last week. Allergan, VRX, a lot of debt in there. Teva has a lot of debt in there too. MNX is another one. Is which one? MNX.
I think he means MNK. Yeah, I mean,
Yeah,
also
MNK,
with the debt,
sorry.
with any kind of bump in interest rates is just adding to the debt as well. So something you got to keep in mind. All right, we're a minute behind here for our next guest, Spencer.
Yep, David Russell. He is a vice president at TradeStation. I speak to him every so often. He's always good for some good market insights. We'll be right back with David. Welcome back, everyone. Pre-Market Prep, Spencer Israel, Joel Elconin, and Dennis Dick back from vacation. And we are now joined by a new guest, David Russell. He is a vice president at TradeStation. David, how's it going today?
Good. Good to be on, gentlemen.
All right. I was talking to you last week over the phone, and you brought up an interesting point about volatility. So I was wondering if you could just kind of recap that point for us.
Yeah, so I was looking at some of the things we have on the TradeStation platform, and what was very interesting to me was, a lot of people look at the VIX, they look at implied volatility, but I was looking at the actual historic volatility. And based on the calculations that I ran on the TradeStation platform, the 30-day real historic volatility on the S&P is now the highest it's been since late 2008. So I think it's kind of interesting. This went above the levels we saw from the pullback in like 2011 and 2015. So I think right now we're in a period where volatility has just been extremely low, and it seems like it's coming back for a while. And if you look at the incredibly smooth ascent that the market had, really all of last year and into the beginning of this year, that now is kind of out the window. And I think it's interesting when we look at the bigger picture because from my point of view, there's nothing really that's positive that can happen in the next 2 months, let's say, until we go into earnings season, maybe next month and a half. We're going to have the Fed. We know that whatever they do, they're going to be raising rates. They're going to be talking about higher interest rates. That's seldom a positive thing, just from the big picture point of view. Then you have the European Central Bank. You have political uncertainty in Europe, which people tend to forget about. We have craziness with Merkel and other stuff happening over there. Then you have other obvious political things between China, the United States, tariffs, all these things. So I kind of look at the big events and I look at like the potential for something to happen. And it seems to me right now that everything has been so skewed on the positive side, from sentiment for so long. And then you look at the same time, the volatility is going up. Then you look at the S&P 500, which, has been, it had a long-term channel. It broke through the top of it and now it's pulled back into it. I think right now we're just going to be in a period where volatility, not only is it on the charts in terms of the historic volatility, in terms of the fact that we have now a widening range, which means we're likely to see, big swings, I think, within that. And then you also look at what's happening with the news events. The news events, in my view, favor, a period of volatility and consolidation and range trading for, I'd say, over a month from now.
David, question from our chat here. Is there a particular TradeStation indicator that you use to show and track historic volatility?
There is actually an indicator. And, we are now in the process of going up to TradeStation 10, and a lot of customers are going to have that soon. So it's a lot of people are still using, 9.5. But basically, if you go into the actual add an indicator, it's one of the indicators. There's several kinds of volatility on there. And one of them is simple historic volatility. And what I did was I put that into my chart, and then I changed it to a 30-day interval.
Gotcha. Okay, so going back to the market. So basically what you're saying, if I can recap it, is that everything is priced in, and we can only go down, pretty much.
Well, I don't know if everything can. I would not say we can only go down. I don't think that that's true. I think we can only go sideways for now, and I think that a lot of good news is priced in. I don't think there is a lot of bad news per se, but I think in terms of if you look at where we stand for the next, I did a post on our blog, Market Insights, about 2 weeks ago, and I said, well, until earnings season, think of all the events. We all kind of look at the news. What could be a positive in the next month? We have the Fed. I mean, how's that a positive? If they say that they're not going to raise rates, then we think they're worried about the economy, which they're not. And if they say they are going to raise rates, then they're taking away the punch bowl. So that's not bullish. If you look at, other kinds of events like happened, with these steel tariffs last week, now suddenly we have new events. And all of those, when I look at them, are more likely to break in a negative direction. Like the situation, let's not forget, it's not just the steel tariffs. Look what happened in China when the president, did this apparent power grab. The market didn't like that. That hurt Chinese stocks for a while. And then, like I said, I don't know exactly what's happening now with Merkel, but I mean, this is European politics continue to be, increasingly unclear. I think Macron has had, bad ratings. Italy, just another sort of uncertainty about their political situation. So when you look at these big picture things, I think there's a lot of things that can shake things up. But then you look under the surface, and across the world, pretty much, we have, unemployment at longer term lows. We have strong economic indicators. So I don't think I would say things can only go down. I think they can only go sideways for a while. And I think right now, when we look at the S&P 500, we have the possibility of just a range that's going to be in place. And I would not be surprised to see us probe back down to around 2,600 on the S&P. Back to that level from early November, I think it was. There was kind of a zone that the S&P was in back then before it broke out. And, I think that this range, one of the things I've learned from trading is that when you're in a range, you'll often have a smaller range and then a wider range. And right now, there's kind of a smaller range, kind of between 2,700, 2,800 that we saw in the last week. But I think now you watch for that range to widen. And as that happens, I think that then we'll start to see people buying the interesting areas of strength. And that's kind of what I think people should be kind of focusing on. As I look out there, I see some interesting sort of things that have been emerging. And to me, one of them is that there's just an amazing amount of stuff happening in technology. And I think if you look at, I recently did a post when I looked at a lot of these companies, like, for example, CRTO. Look at Fari. Look at some of the other things that are happening, especially right now in the security space. If you look at, there's several companies in that area, and I had a list and I'm trying to find them. But Fari was one of them, and it's not the only one. Palo Alto Networks had good earnings, and there are a couple of others that did recently as well. Let me find my notes here. But it's just kind of interesting when we look that I think that we continue to see a lot of things in the technology space. We have seen a certain amount of rotation, I think, or it's interesting when we look at the airlines, because I'm starting to see within the airlines, they're just sitting there, but they're actually starting to outperform the market in the last month or so. We're starting to see some strength there. And I think we can look at the bigger picture. Some of these areas, I think we're going to start to see money moving in, but some of the areas that have been weak, I think, especially things like industrials and housing. I think housing is something that had an incredible run in late last year. And I think that there's a lot of potential for it, but it's in the midst of a bad quarter. Toll had a good report. No one cared. They hammered it. Yeah. So I think right now it's a time to be looking for those kinds of areas and to just widen our perspective and look for some good consolidation up and down. When we have a nice uptrend like this that kind of pauses, you're going to often see a lot of whipping up, whipping down, and then there's often a final washout before the rally resumes. So I think right now, traders should be looking for, if I want to be buying S&P, I'm going to wait. I'm not saying to be short here, because this is actually a time when we need to be charting stuff on hourly charts, much more than the daily charts, because a lot of things like with the indexes, I think we're going to be seeing things following patterns on the hourly charts, which means shorter term movements in terms of really finding your levels. But from a big picture point of view, looks to me like the range is what we're going to see. And, one of the things I've learned is that when things are like this in a range, wait for that range, because you will get the entry at the bottom of the range.
David, I agree with you here. When I'm looking at all these charts, and especially some of the other sectors, different sectors you just went through here, I see confusion. And that's that's what you look at when you look at the S&P chart as well, because you've got tech stocks which are very strong, you've got drug stocks which have been very weak, you've got the housing that you just said which is very weak. You have certain sectors that are very strong actually, and certain sectors that are very weak. And it's difficult to really get that picture because really when we go back to November, December, January, they're buying everything across the board. And that is not the case now. There is winners and losers. It is definitely sector related here now. I mean, you look at stocks like Netflix, which is making a new all-time high here again this morning. They're coming back into some of these tech stocks and buying them hand over fist. Even a stock like Square, which was really sold off in December and January, and obviously February, it's come all the way back and is not that far from highs as well. So there's stocks in the tech sector that have, really showing a lot of, relative strength here, where you've got other sectors that just don't show any strength at all. So when you put all that together, the S&P chart is kind of all over the place because, you've got some sectors so strong, some sectors so weak. So who's going to be able to, pull us back? And obviously this is a lot of other, political uncertainty here too. And then you got tariffs. There's a lot of things going on right now. And I think that's what leads to the confusion.
I agree. And I think, all right, so look at an example of stock like Ingersoll Rand or a stock like Manitowoc. I like, these are for me more like indicators. When you look at what the economy is, these look terrible. I mean, there's no reason why industrial should be this weak, but they are. So the thing is, all right, look, what's probably going to happen is some of these stocks are probably going to get beaten up for another month or so, and then you're going to see an influx of money into them going into Q1 earnings. That's kind of my view. But the thing is, and the thing I've learned is, don't get ahead of the events because people will wait until a week before the event to put that money to work, and you'll just be suffering in that time trying to pick bottoms. And then you look where the nearer term strength is. Here we go. IMPV. There's a technology. I wanted to just get back very quickly because I found my list.
Yep.
These are the security stocks. I mean, about 6 years ago, it seems, they created this ETF, the HACK, H-A-C-K, and it was like the cybersecurity, and it was all the rage for a little while, and then everyone forgot about it. Well, in the last month, it is back. IMPV, CYBR, CyberArk, Carbonite, FireEye, all had good earnings last time around. Palo Alto Networks. Now, I'm not sure if these guys are all in the index. I mean, these ETFs, this is not a super active ETF, but the space, cybersecurity is back, and these guys have been outperforming. And I wrote a story recently. I looked at, this is a crazy stock that when it first came out, everyone thought it was going to change the world. It did well for a while, then it just died. And now, last quarter, CRTO, Criteo, it's like this online marketing company of some kind, but they had a good quarter. And now you have a company that's very inexpensive. And I'm using this as an example because I think right now, technology is clearly in a secular bull area. And I think that when you're in that kind of environment, people are going to look for the value. And you look at some of these technology stocks, and I'll tell you one I bought last year and I sold way too soon. This stock is almost a joke, but it's been great. TDC, Teradata. This was a company from God knows how long ago that used to do some kind of mainframe software. Somehow they've turned their business around. And now here they are coming off the 100-day moving average. So I think when you look at a lot of these things right now in technology, I think there's still a lot of value and growth. It's still a good area. And I think people are going to be sifting through those areas. And the thing that really grabbed my attention right now was these cybersecurity stocks, especially FireEye. That was a good quarter.
Yeah, that's what I've been keeping an eye on too. We're on the line with David Russell from TradeStation. David, I always think it's interesting when there's big moves in the market. You had the big down move. Like how the customers react. I know you have people trading stocks and futures, and I know there was a lot of money that went into the market at the beginning of the year, and now the big sell-off. But from what we're seeing, people are kind of staying the course here during this sell-off and, kind of accumulating. To me, that makes me like, man, if we take out that next low, then, it could really trigger something else. Just talk about the characterization of overall the TradeStation customers, how they reacted during that break, and, what kind of information you get from following the activity of your customers.
Well, from what I can say, what the regulators will let me say to my compliance folks, but essentially just we always have that. So this be, the provision.
Sorry.
Just so, I always but what I would say is that we just saw a lot of activity like everyone else, and we saw a lot of the concentration in the big instruments. Things like SPY. In fact, if you want to look on our blog, I did do a recap of all the stuff that was big, and let me actually pull up that article. But if you look on our blog on TradeStation.com/market insights, we actually did a post back, I think, on the 27th. And what we really saw was that we saw that, Apple got more active and NVIDIA really, actually, no, I'd say the big thing was we saw the SPY. We saw more volume in SPY. And overall, when you look at it, it's kind of what you would expect. We saw more volume in the those highly liquid kind of, crazy volatility products. Those things had big spikes in activity. They moved up the rankings. And then some of the more kind of like just generic companies that are, when I say generic, I mean, they're just broad companies. Like a Facebook, that's just a normal company. It's not a volatility instrument per se, the way some of these other things are. That moved down the list. What's also interesting is that General Electric kind of fell off the list. And I've been watching that stock, and it's had some bottoming patterns. I wanted to mention the fact that GE went from being a very liquid sort of trading stock. It fell off the last month, and it's kind of interesting. So I've been watching that one. But I would say overall that we just saw a lot of people who were continuing to focus on the big, broad instruments. It was really more of a shift toward the bigger stuff. And there was we did see, like everyone else saw, a clear kind of shift toward volatility.
All right, we've been on the line with David Russell, Vice President at TradeStation. David, thanks so much for the time today. Have a good one.
Thanks, gentlemen.
All right.
Yeah, he kind of backed up some points that Fari had as well. It just the market just being in this digestive period, and as we talk about different markets, different trading strategies, and I agree with what he has to say. I mean, we're in a trading range. I almost saw the top of the trading range that I didn't want to see, but now we're just kind of stuck in it. Dennis, any thoughts on Mr. Russell's comments?
Dennis, I think you're on mute. You muted yourself. Oh, pull the old Joel trick. I'll give him a break. Give him a break. Give him a break.
That's what it is. I haven't done that ever. It's the week off.
Oh, yeah.
Right. Okay, yes, I had myself on mute. But I will say the same thing, just confusion. And I look at these charts, and I look at the individual components when we went through them. Tech strong, drugs weak, oil stocks, the big guns have been weak. I mean, there is winners and there is losers, and that is just equaling mass confusion on the S&Ps overall, because every day there are sectors that are up and sectors that are down. So I don't know what to say. I still think there's a lot of institutional money that is, looking for pullbacks to buy, especially on tech stocks. That's why they remain strong. But what is loved continues to be loved, and what is hated continues to be hated. I like those charts of those cybersecurity stocks that he was just talking about. FireEye has been on my radar for a long time. That's breaking out again over 17, so that one looks good. I think that could test upwards to $18 here in the next couple of days. The CyberArk one is the same thing, breaking out over 50. That's a big breakout. So I like that sector, as a trade. I think those are good ideas right now. But, if you're looking at other sectors, like you mentioned, the home builders and that Manitowoc chart, holy cow, I never looked at that one. That's just been annihilated. So there are stocks getting hit hard, and there are stocks that are still holding up relatively strong. So I guess you go with the relatively strong ones as trades anyways, and that's a lot of your tech stocks.
Just took a look at this Ingersoll Rand stock. Used to trade that a lot at Bright. I remember it used to move pretty good with the cat and the deer, but you're coming into some long-term monthly support here. A couple bucks away.
What's the ticker here?
IR, Ingersoll Rand. Hit 84.05 yesterday, got a nice bounce to close at 86.29, but this one will be on my radar once it gets in the lower 83 handle. Several monthly lows in the 83s going back to August of last year. He mentioned FireEye. That's a Sean Udall favorite. We mentioned that several times. That's takes its time. Got an upgrade last week. That's what helped it out. So we need
18's huge though. So that's the only problem, is that you're going to come into major resistance up about. I think we're going to test it. I think there's a trade from 17.20 up to 18. That's a tough level though.
Okay, and do we really no earnings to speak of?
Let's jump to imbalances. Just give you a look.
Oh yeah, we miss you in your imbalances.
There is some big ones this morning, and you know what? It's weird. A lot of tech stocks actually with some sell imbalances here this morning. And we don't have Nasdaq; they don't come out till 9:28, so we don't know what the other ones are doing. But I can tell you, the New York listed tech stocks have some major sell imbalances. Square SQ 138,000 to sell here this morning. Twitter TWTR 199,000 to sell this morning. So somebody's got a big piece to sell on Twitter, at least at the open. CRM, this one standing out big time. Salesforce.com 238,000 to sell. That is an enormous sell imbalance at this time. I actually just want to go look at the book on this because I just want to make sure it's just not one order just sitting out there. That's maybe price. Let me just look. CRM. 120 is 46,000 of it. So somebody's trying to get out of a piece at 120 this morning. Stock's obviously 120.66. This liquidity, you can say, well, why are they not filled? Because this is an order that's geared, that's marked for the open. So it's marked for the 9:30 open there. So that order doesn't become active until 9:30. But that is one thing that's holding, obviously, is 46,000 holding it down with it. 238,000 to go. That is a significant number there of shares to sell at the open. If that stays, this thing could open around 120. Also, just looking at General Electric, which David just mentioned there, thought he had saw some bottoming patterns. I don't know if I see any bottoming patterns or not, but 1395 is a big level that thing needs to hold. It's got 227,000 to buy this morning. So somebody is coming in there agreeing with David, saying that GE is starting to look like at least some value down here. I'm not sure. I've been punished so much on GE that I just have the eternal hate for it now. But it's got 227,000 to buy this morning, so it's got a buy and balance. Bank of America, 145,000 to sell. And then they're mixed. You got Morgan Stanley, 46,000 to buy. Citigroup, 25,000 to sell. Procter Gamble, 23,000 to sell. Alibaba is one tech stock that's got a buy and balance, 71,000 shares. But the imbalances are big here this morning. They will be influential at the open.
What about Bank of America? Is there not Bank of America? Boeing. That's trading in the red this morning.
$5. Yeah. 31,000 to sell. It's significant for $340 stock.
Yeah, we got a question in the YouTube chat over it, and then someone in the in our pre-market chat mentioned it too. And just pulling up the daily here, I see we're traded down 466 here at 340.01. You're just looking here. What are you leaning on if you buy it here? Let's say you pick it up. I know there was a low right around 340. You had a low at 340.29. But then I look below that. The low on the previous day for that was 335.13. So do I want to risk $5 on there could be an intermediate level in between there. But just weak, and this stock has had a major run.
It's volatile.
Yeah, it's volatile. And, maybe if I could see this, a quick blip down into the 320s. I see a 19.25 low, and then a couple
huge levels, 320.
Yeah, that's what I'm looking at.
That's your major support.
Yeah. So,
but Boeing, when you put it in perspective,
this
just had such a run. I mean, you look at this in 2017, so we're just going back just over a year ago, $150. Stock doubled last year. And this is a huge company that doubles. So now if you're coming in here and buying it now as an investment, I feel like you're so late to the party. You can trade anything. But as an investment, I feel like you're so late. This isn't like a young company that's, reinventing the wheel and is growing earnings like crazy. This is a big company, but to double last year, that was incredible. And I feel like the easy money in Boeing has been made on the long side. And that's why I think I'm staying away from something like this, at least from an investment. I mean, you can trade anything, but I just can't see jumping in here with new money investing in Boeing at 344 when you could have bought it at 150 last year.
All right, Spencer, you want to wrap things up, or anything else on the radar you want to cover?
Nope, nothing on the radar for this morning. Just getting back in the groove of things. But if you want to catch our podcast or any old show or our interviews with David or Fari, you can do so on iTunes, SoundCloud, and Stitcher, or go to Benzinga's YouTube channel as well. Don't forget, folks, we are just about 2.5 weeks away from the Benzinga Women's Wealth Forum, March 21st in Boston. If you go to bzforum.com and apply the promo code PMP, Papa Mary Papa, you can get a 50% off ticket. That's 50% off to the Benzinga Women's Wealth Forum, March 21st in Boston with a promo code PMP. But that's it for us today, folks. I hope you guys like the show. Glad to have, you know what I was going to say, Joel, is I feel like we missed a really golden opportunity today to like tell Dennis like some crazy piece of news that was obviously false. Like if Walmart had bought JCPenney, we probably could have gotten him on that.
No.
I don't think you'd get me on that one. But
we probably could have gotten him on something like Apple bought Fitbit. Oh, they had earnings, so we maybe could have gotten him on that. But anyway,
I don't know, man. Even though he said, even though he wasn't trading,
I'm watching the headline.
Yeah,
okay,
he was.
Okay.
What was he doing in those lines for 3 hours? He was looking at his phone.
It's true. I'm on the Disney Wi-Fi, which wasn't that great, to be honest with you, because it kept coming in and out. But I'm on the Disney Wi-Fi, just checking stock prices as I'm waiting there. And I try not to. My toddler couldn't wait 3 hours in line, so we didn't go in any of the 3-hour line ones. But we were in a lot of 20-minute lines.
All right.
You never did one trade down there? You didn't do
lines.
one trade? You didn't pull trigger on anything down there?
Immediately went off the grid. I did not do one trade. I'm actually just starting to get the feel. I don't like to jump right back in, so I haven't even done any equity trades this morning. The only thing I did do this morning, I sold some U.S. dollars, and that's because we're coming in. We don't talk currency a lot on the show, but U.S. against Canadian, so I converted some U.S. to Canadian. 129.5. It's up at a major resistance point, a 130, which we haven't been back up to for a while. So I was selling a little bit of U.S. dollars this morning. That's it. I'm going to be jumping in the stocks, though, obviously at the open. I'll be jumping in them after the bell, and I'll be trading here, so I'll be getting that back in the groove. Usually takes about 24 to 48 hours to get right back in that groove. So by Tuesday, midday, I should be feeling a little bit better.
All right, well, we will be back with you folks tomorrow morning. Hope you all have a good rest of your day, and we will see you folks on Tuesday.